Okay, so hi guys, I hope you people are doing well. First of all, welcome to the session and thank you very much for joining in. I know that it gets a bit tough to join in before one day before the examination, but the whole agenda and the whole objective of actually conducting the session today is I wanted to have, I wanted to have a discussion with you people, and I wanted to take up one of the most recent examination papers so that I could discuss with you people and I could actually take you people through. So we are now going to start off. Here we have in front of us the September-December 2022 examination, which is available on the ACCA website. So this is something that we are going to be talking about, September-December 2022. Yeah, some of you might have actually attempted this paper earlier, but again, I just thought that maybe I could just take you people through one of the examination questions so that you have an idea that how the examination questions would be handled. So the first question that I have here is that it's like section A, which says that it contains 2 questions and each of the question is of 50 marks. And if we talk about this specific question, so we need to understand something, which is that there is this question number 1, which is about the consolidation. I'm not gonna be doing that consolidation question right now. I would rather be going to the question number 2, and I would be going through question number 2, would try to do question number 2 with you people so that you people could have a more of an idea that, okay, what to do and what not to do with respect to these questions. So the question number 2 that we have is actually about the company called Jessie Company. You know, this is how the examination questions are structured, that you give some introduction, and then after that introduction, you get these exhibits and then the requirements and then the word processors and all that. So question number 2 is usually a 20-mark question. Question number 2 is usually 20-mark question, which usually have got some portion for the ethics also. Now let's try to see that what is this question number 2 all about and how exactly are we going to be answering this question number 2. So let's just start discussing about the question number 2. Now, okay, Zordan, I have actually recently attempted the question number 1 on this paper, 𝗘𝗺𝗶𝗹. So what I'll just do is that I will share the recordings of that question number 1 with you so that you could just review them. And because I just want to be doing something that I've not done so that I am able to deliver more resources to every one of you, right? So I'm just going to do question number 2, 3, and 4, and we'll share the recording for question number 1 so that you could just try to get it done, right? So I hope that it is not an issue for you. Okay, now let's just see. It says, Jessie Company operates in the oil and gas industry, and the current financial year end of Jessie Company is 31st December 2007. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Granting of licenses describes the process for granting licenses to customers, and then the ethical issues describe potential ethical issues. The response option, we know there is a word processing document. What exactly are the requirements? What I'm going to do is that I'm just going to copy every single thing as part of the requirement. I'm going to press Control C. I will put it here, Control V. So I know it says discuss whether the revenue from the service phase and the grant of the license of the customer are separate performance obligation, and whether the revenue should be recognized at a point in time or over a period of time. Number 2, it talks about the ethical issues that 𝗘𝗺 would face, and then the professional marks are there, so and so, so and so. So let's have a discussion about this first part of the questions requirement, which is, it says, the voice is there. If you cannot hear, you have to join with audio. So now there is this granting of licenses. That's one aspect. Granting of licenses, that is one aspect that I want to discuss with you people. So now, first of all, obviously we are going to do it together, but we would adopt the approach that you would read the question first and then I will follow up. So now I'm actually going to be zooming it out so that you could see the whole of the screen, and I want you people to read it through. Okay, can you just go through this, please? Read this through, please. And I'm just going to start discussing with you people in 2 minutes time. Okay, let's just start discussing. Now it says Jesse company provides services to customers to help them evaluate whether there are potential oil reserves in a particular geographical location. So the customers generally enter into a contract before the survey process commences and eventually purchase a license to search for oil deposits. So now what is the service that we are providing? We are providing a service to the customers to help them evaluate whether there are potential oil reserves. So what they do is that they generally enter into the contract before the survey commences and eventually purchase a license to search for oil deposits. During the service phase, Jesse collects site data over the first year of the contract, then processes and analyzes the data over the 6 months. Okay, so it's like first year and then 6 months. So like 1.5 years has passed already. The area surveyed is determined by Jesse, who is the only decision maker and the owner of both data and the land being surveyed. Okay. So again, the data and the land is being surveyed is JC is the owner. All of the data is made available to the customers in the final survey report. Okay, now what next is there? Customers cannot process the data or obtain all licenses other than by JC's approval. The value to the customer is in granting the license and not in the data. Okay, so basically, even if the data is made available to the customer can just not do anything with that data till the time they are being granted the license. As data is being collected and processed, presentation and reports are given to customers to indicate the potential of an area. Customers have an ongoing access to data during the collection and the processing. When the final report is made available, the customer decides whether to invest in the area or not. Okay. Now, so whenever the final report is made available, the customer then decides whether they have to make whether they actually have to make the investment or not. Now, what next is there? The next situation is, it says granting of license. Okay, now what next is there? So for the granting of license, it says the customers can exit the contract on receipt of the report. But the total price of the contract, including the price of the final license, is still payable to JC company. Okay. So if the customer, they want to exit, they can exit, but they have to make available the price of the final license. I mean, like they have to make the price available. Okay, now what next is there? The next situation is that it says in practice, no customer leaves the contract at this stage. License is granted at this stage, and once the license has been granted, there's no further analysis or service provided to the customer. The directors of JC concluded that the company has only one performance obligation, that is being the granting of license at the end of the survey. This is because collection and processing of data is a component of the granting of license and cannot be distinguished from license. In addition, service phase alone is of no benefit on its own. Final license provided to customer is based upon the data collected and so on, so on. So now see, what is the requirement of the question? If I could just go on to the word processing requirement again, it says discuss whether. What do you need to discuss? You need to discuss whether the revenue from the service phase and the granting of the license to a customer are separate performance obligation or a single performance obligation, and whether the revenue should be recognized at a point in time or in a point or over a period of time. Now, guys, let's just try to understand. I am not writing down the whole answer in the form of detailed paragraphs, but I'm just gonna make pointers for you so that it could be helped in actually drafting the answer. Now, see, one thing is that I'm just writing down a few pointers. So as per IFRS 15, the revenue shall be recognized when the performance obligation is satisfied. So you have to recognize the revenue when the performance obligation is satisfied. That's one thing you need to understand. Now, when we talk about the performance obligation, is the promise under the contract. Under the contract to transfer to the customer the goods or services that are distinct. Now you see, you got to create a situation, you got to create a scenario that how would you be answering the question. So see, there are pointers that you have to write down. So first of all, the revenue is recognized when performance obligation is satisfied. And performance obligation is basically the promise that you make under the contract. So a good or service is distinct if it meets the following criterias. Now, what are the criterias? Okay, so what are the criterias The first one of the criteria is that customer can benefit from it on its own slash or together with other resources made available to them. Number one, and the second thing is that for anything to be considered as distinct, there are two conditions that are there. The entities promise to transfer goods slash services is separately identifiable from other promises in contract. Now see, this is very important. Now see what I'm going to do. I'm going to evaluate the situation now. During the service phase, what is he doing during the service phase? So during the service phase, what happens is that JC collects data over the first year of the contract, then processes and analyzes data over the next 6 months. So JC company, I just copied it from there. JC company collects the site data over the first year of the contract and then processes and analyzes the data over the next 6 months. The presentations, what is it made available? I'll just copy this part of the scenario also. I will also copy what do you want to keep in secret files? Madhu, I don't understand. Okay, so next is basically, see, you have to evaluate during the service phase. JC collects site data over the first year, then sites data. Processes and analyzes the data, and then presents to the customers the presentations and the reports. The customers cannot process the data or obtain a license other than by JC company's approval. The whole information and the reports that have been presented to the customer are of no use without the license. This suggests that the license is the significant part of the contract, and the services provided as part of the contract are insignificant, as they are of no use without the license. They are of no use without the license. On the basis of this, there seems to be a correct assessment by the management that there is a single performance obligation, and that is to grant the license. Now, with respect to the recognition of revenue, the customer cannot benefit from the Okay, Wasim, I'm just gonna come back to what you're saying. With respect to that, the customer cannot benefit from the information made available to them. Therefore, the revenue cannot be recognized over time, and rather it has to be recognized at a point in time, that is when the license is granted. Or see, there is one thing mentioned in the scenario. There's one thing which is mentioned in the scenario, which is that the customers can exit the contract on receipt of the report, but total price of the contract, including the price of the final license, is still payable to Jesse company. So what happens is that the customer would still have to pay, or when the contract is exited. Right? You get my point. When the license is granted, or when the, with respect to the customer cannot, therefore the revenue cannot be, and rather it has to be recognized at a point in time when the license is granted or when the contract is exited, as the total amount is still payable. So resultingly, the contract that is entered is actually for the license, and the services provided just complement that and should be considered as inputs rather than separate performance obligations. So this is how you're going to answer the question. This is how you have to pay irrespective of whether you take the license or not. If you exit the contract also, you got to make the payment to them. This is not a mock paper. This is not the mock paper. This is the actual examination paper, Blackout. Okay, please have a look at this and just let me know if you do understand this. Yeah, do you people get it? Okay, lovely. Now let's just move a bit forward and let's discuss further. So the next aspect of the question is about the ethical issues. Let's see, let me just open it up and let me allow you people to actually look at it. Then we're gonna start discussing. So can you just look at it? Okay, blackout, it's IS 38 intangibles. Okay, now let me just guide you people a bit. Let's just try to see. See, what exactly is the requirement to the question for this part? It says, explain the ethical issues for the finance director, Mr. 𝗘𝗺, setting out how the issues may be resolved. So you have to identify the ethical issues for the finance director, Mr. 𝗘𝗺, and setting out how the issues may be resolved. Now, let me just guide you people a bit. Whenever you come across an examination question on the ethics, I'm just giving you a bit of an idea as to how you would actually deal with an ethical scenario. So I'll just create a situation for you. See, there are these fundamental ethical principles. That's number one. Um, so amongst the fundamental ethical principles, there are 5 fundamental ethical principles. What are those 5 fundamental ethical principles? They are integrity, they are objectivity, they are professional competence and due care, they are confidentiality, and they are professional behavior. So these are the fundamental ethical principles. Now let me just guide you something, that what exactly do you mean by this. So when we talk about the integrity, so integrity actually means that you have to be honest and you have to be straightforward. So that is no manipulations, no wrong information, etc., etc. Then the second one of them is the objectivity. The objectivity is actually free from bias. That is no in I mean like it's like being independent. Then you talk about the professional competence. So professional competence is like it's like competence is being professionally updated with the knowledge required for the job role played. And due care actually means exercising, being careful while suggesting any accounting treatments, etc., to ensure that they are not incorrect. That's generally what it means, right? Then the confidentiality is like uh, disclosing information to unauthorized personnels slash using the information for the own benefit. That's also something that's there, right? Then professional behavior is that bringing the profession into disrepute or creating a wrong impression about the professionals. Now, that's basically fundamental ethical principle. I know that this is not what you're going to be answering here, but I'm just trying to create this because I remember that one of the students messaged me in the group also during the day that he would appreciate if you could please guide us about how to deal with the ethical scenario. So that's what I'm just trying to do. Now that's one thing. Now what's next? It's basically the threats to independence, the ethical threats to independence. So when I talk about the ethical threats to independence, there is this self-interest, self-review, advocacy, intimidation, and the familiarity threat. Now, generally speaking, what these ethical threats are, so the self-interest threat is that personal slash financial interest is at stake, like owning the shares, etc., or applying for a job. So these are the things. Then there is this self-review threat. So with respect to the self-review threat is that reviewing your own work. This usually is not the scenario with the SBR questions. This is usually scenario with respect to the auditing question. Advocacy is that promoting or protecting the interest of a client usually arises with the audit client, right? Audit client for which you are also a lawyer. So there would actually be an advocacy. And intimidation threat is basically, intimidation threat is like fear, threat of expulsion, losing job, losing promotion, etc., etc. And familiarity is that compromised if you know someone for long duration. So the professional skepticism doesn't prevail. Now, what you need to do in this, what you need to do with respect to the examination is that from the scenario, identify the ethical issues and then elaborate them and then suggest the solutions to overcome them. right? That's what you have to do. That's what you have to do. So if you want to do this, this is how you will do it, right? Now let's just try to understand. How would we be dealing with the ethical issues in this scenario? I've just created a background for you. Obviously, this is not the answer, but I just told you, I've just guided you that how in the examination you would plan out an answer. Now, so let's just try to go through this scenario again. Can you just identify the different ethical issues here? Yeah, can you identify the ethical issues in here? Okay, now let's see. I've got so many answers. Thank you all. I mean, like, I am really happy to see all this. Now, see, it says that JC uses big data analytics and various algorithms. And various algorithms and various algorithms to indicate the potential of finding oil in a particular geographical location. Okay. Now, what next is there? The next situation is um, just a second. Yeah. The chief data officer understands the science and statistics and can explain outcomes simply and clearly to customers. Finance director who is ACCA qualified has little knowledge of the technology involved. Okay. He feels that technology used is too complex and there is no need for him to understand it as long as the chief data officer understands it. Okay. Now, the chief data officer reports to the finance director. Now, that's a bigger problem. See, what happens is that if the chief data officer has to report to him, the chief data officer reports to finance director and he is unable to understand the science behind the report. So what is it? It's a lack of professional competence. You get my point? It's a lack of professional competence. What next is there? Recently, outcome of one set of data showed that there was little chance of oil being found on one of the sites, but finance director insisted the data was run again to include historical data, which would then indicate a more favorable outcome for the customer oil company. Now, so what actually happens is that they forcefully running the data again to get a favorable picture is basically what? It's giving rise to intimidation, threat. It's a lack of integrity, and it's like lack of objectivity also, because that's compromising the independence, because the data is now biased. Yeah, you can use the threats. That's not an issue. You can use, that's not an issue. See, what happens is that he's actually being reported on those, right? So if he's being reported on those, then he has to be competent on them. Okay, I'm just gonna come on to this 𝗘𝗺 for the self-interest, if it is a self-interest or not, because I'm just progressing along and I'm just reading it through, right? So now what next is there? It says 𝗘𝗺 has a friend is 𝗘𝗺 who works as an accountant at Oleo company. Okay. 𝗘𝗺 has asked 𝗘𝗺 for advice as to how to account for the license granted to Oleo company. 𝗘𝗺 suggested that MS 𝗘𝗺 use IFRS 16 leases as it is a right to use the license. Now see, what happens is that again, what happens is that there is a lack of competence shown by the finance director, as IFRS 16 specifically excludes the leases for the exploration of mineral resources. That falls under a different IFRS. Now, a lot of you people would actually know the name of the IFRS, which is IFRS 4, exploration of minerals, etc. But in the examination, what is going to happen is that just try to understand. In the examination, um, you might actually get it wrong, right? So if you get it wrong, you know what's the best thing to do? Instead of getting it wrong, the best thing to do is that don't write down the name of any standard. I mean, don't write down the name of any standard. Just talk silently without mentioning any standard. That's the best approach. That's the safest approach. You get my point? That's the best and the safest approach. So just don't mention. But you just need to know that this IFRS 16 specifically does not talk about the exploration of mineral resources. Now, so that's a lack of competence plus additionally lack of due care as suggesting something without thinking about it is inappropriate, right? That's inappropriate. In addition, Mr. Betson knew that MS Stylos held shares in Oleo company and suggested to her that share price of Oleo was likely to fall because there was a little chance of oil being found in the after the granting of license. So see what happens is that that's basically breach of the confidential information also. So I am just going to review what you people have just mentioned. Okay, you could talk about the familiarity threat also, as the friend is connected. And usually what happens with the familiarity threat is this problem happens, right? So you people have mentioned about, okay, somebody mentioned IFRS 38 licenses, blackout, that's what I exactly mentioned. Don't mention the name of the standard if you don't know. Just mention the IFRS. Okay, confidentiality AB, you mentioned that was correct. Patricia, you mentioned about professional competence, due care, and behavior also. Okay, thank you for that input. Yes, there is a lack of professional behavior also. That's lack of professional behavior that is being demonstrated with respect to rerunning of the data, and also while breaching the confidentiality of the information. That's also something that's happened. Integrity, objectivity, yes. Okay, lack of knowledge, competence, wrong treatment. Thank you. Yes. Prohibits the use of historic. Okay, now see, blackout again. See, just don't try to talk what is not needed. See, you are again talking about that fair value measurement. Who's asking you for fair value measurement? It's something that's a non-financial information that's being there. You see, just try to understand. It's talking about the big data analytics software. They're not talking about the financial reporting. They've manipulated the data. Okay, Zordan, ideally you should pick all of them because you see there may be more available marks, but you see, generally speaking, as a student, you know this thing that you don't get complete marks, right? So ideally speaking, if you can identify all the ethical issues, just give a one-liner on all of them. Do you get it now? Yeah, so do you people get it now? Now, let's just talk about the requirement of the question. The requirement explain ethical issues for finance directors, setting out how the issues may be resolved. Now, this is also one of the part of the question. So now, how the issues may be resolved, how the issues may be resolved is like this. How the issues may be resolved is like this. One thing is that you'd have to discuss with some colleague, contact a mentor who is also a professional accountant, work on the improvement and make himself aware of the ethical requirements of ACCA. If he is unable to improve his competency with respect to the data analytics, he may refer to the board of directors and let them decide if the chief data officer shall continue to report to him or reporting lines be changed. So you see, you are facing an ethical situation. Just put yourself. Is there no screen showing? Just put yourself into the situation that, okay, if you are being faced with such a situation, what will you do? Probably you would want to actually contact the directors, and you want to be honest, and you want to talk to them, you want to discuss with them that, look, these are the issues that I'm facing, these are the problems that are happening, and I want to make sure that I get out of it. Is the screen blackout for anyone? Okay, lovely. So I hope that you people understand this. So that's actually marks the conclusion of this specific question, and I hope that you people do understand. So if there are any queries that you have, please do ask, or else I move on to the next question. Okay, yeah, I mean, Kevin, that's what I told you, that he has to understand, because so if he is obtaining the reports, if he is taking the reports, he got to make sure that he is well aware of the system that actually is there with respect to that report. He has to make sure that, right? He just cannot skip that. He has to make sure. Okay, now let's move on and let's talk about the next question. Okay, no, I would suggest no. If he requests, then go ahead. If he doesn't request, don't go ahead. Now, the next question is about 𝗘𝗺 company. It's again one of the questions that's basically on multiple accounting standard that this question is going to cover up. So there is a requirement to this question. It says explain in accordance with IFRS 15 how the consignment arrangement should be dealt with in the financial statement of 𝗘𝗺 and explain why the proposed treatment of revenue is not in accordance with IFRS 15. So I've just copied this requirement in here so that we could have an idea that okay, what to do and how to do, right? So let's try to understand this. If I talk about the consignment arrangement, let's discuss. So I'm just giving you 5 minutes time to read through this, and then I'm gonna start discussing. Okay, now let's just talk about it. Let's discuss it together. So it says that 𝗘𝗺 company provides garden centers. 𝗘𝗺 company provides garden centers uh, with furniture on a consignment basis. Consignment basis is generally if you're able to sell it, good enough. Otherwise, return it back to us. 𝗘𝗺 company retains legal title to the furniture until they are sold by the garden center to a customer. The products are immediately available for sale on delivery to the garden centers. The garden center does not have an obligation to pay to 𝗘𝗺 until a sale to the customer occurs. Physical possession remains in the garden center unless furniture is sold or returned to 𝗘𝗺. 𝗘𝗺 also retains the right to have any unsold furniture returned to them or to transfer unsold products to another retailer. So the right is actually with 𝗘𝗺. Once garden center has sold the furniture, 𝗘𝗺 has no further obligations. The garden centers then remit 𝗘𝗺 the sale proceeds net of their commission. 𝗘𝗺 has decided to include the sales value of all furniture delivered to garden center in revenue. Now, what do you people think? What should be done with respect to it? What do you people think should be done with respect to it? Yeah. What's your suggestion? What should be done with this? Derecognize revenue? Okay, why? AGY. Why do you think that the revenue should be derecognized? Because they didn't sell. Okay. Okay. What else? Because it hasn't fulfilled, meaning the risk and rewards have not been transferred. Okay. The commission to be treated as revenue. Okay. Okay. Rights hasn't passed. No transfer. Okay. Yeah. Very good. Thank you for all this. Let me just list down some of the pointers. See, what happens is that the revenue shall be recognized. Again, see, when you're writing down the exam, when you're writing down the answer in the examination, you just got to create some point. The revenue for the sale of goods shall be recognized when the performance obligation is satisfied. The garden center The goods are delivered to garden center. Physical possession is transferred, but garden center is neither obliged to make payment nor it can control the movement of the furniture on its own. Rubble can recall furniture unsold by the garden center. Sorry, garden center only becomes liable to pay if the furniture is sold to a customer. Rubble can recall furniture unsold by garden center and can also transfer it to the other retailers also. On the basis of all the above information, on the basis of all the above information, the legal title to the furniture remains with Rubble and it cannot recognize the legal title, and the economic reality is also that the furniture belongs to Rubble and it cannot recognize revenue till the time it is sold by garden center. Hence, the revenue recognized shall be reversed. The revenue recognized shall be reversed. So these are the pointers that I've actually identified. Okay, let me know if everyone is okay with this. Yeah, let me know if everyone is okay with this. Yeah, it is there. The garden center has nothing to do. I mean, the garden center doesn't have to recognize. Garden center is purely acting as an agent. They are not the principal. They're not the owners of that. Okay, let's move on to the second requirement. It says assess whether Rubble should create a provision in accordance with IAS 10 for its sales tax and the income tax liability in the financial statements for year ended so and so, so and so. So I'm just copying the requirement here. You have to talk that whether they should create a provision in accordance with IAS 37 provisions and contingent liabilities for its sales tax and income tax liabilities, right? Okay, now can you just try to do this? I have just put this in front of you and can you just give it a try, please? Yeah, it has to reverse it. It has to re-recognize it. Yeah, give it a try, please now. Okay, so I have actually got inputs from you people. Now let's just start discussing it together. It says ruble has shipped and sold goods in overseas country for 10 years. Ruble was under the impression that the sales in the overseas countries are subject to sales tax if the company had physical and economic presence in the country. Ruble had always understood that because it did not have any physical presence in the country, it was exempt from sales tax. However, the tax law stated that companies were subject to sales tax if they had a physical or economic presence. However, tax law stated that the companies were subjected to sales tax if they had a physical or the economic presence. The word difference over here is and or. So it's like either. It's like either. Either of them is there, then it actually has to be, you are required to make, you are required to actually pay sales tax. So they obviously had an economic presence because they had been exporting the goods. They had been sending the goods. So the economic presence was obviously there, right? Now what next is there? It says, therefore, at 31st December, 7 ruble has realized that a liability for sales tax has existed for the previous 10 years. Okay. Now, ruble has never collected sales tax or filed sales tax return in the overseas country. Ruble has never been contacted regarding sales tax by tax authorities in overseas country. Ruble therefore considers the risk of detection by the tax authorities is very, very low. However, if taxation authorities knew about Ruble's activities, it is probable that Ruble company would be liable for uncollected sales tax, interest, and the penalties. Ruble considers that tax authorities would settle for an amount less than the full liability, okay, if full disclosure was made, as it is widely understood that taxation authorities would look back no more than 7 years to determine the amount of sales tax due, okay. The tax authorities can reclaim any sales tax liability from the prior years. So now what should be done? What should actually be done? Okay, see, I actually am gonna read out few of the inputs that I've got from you people. Wasim says that for sales tax provision should be recognized and income tax contingent liability should be disclosed. Okay, Wasim, I'm gonna come to income tax. First, let me just get over with the sales tax. Zordan says retrospective calculation of income tax as there is no, okay, ignore it right now. Osman says there is a legal obligation for Rubble to pay sales tax and legal proceedings makes it highly likely that they will find out Rubble has not paying sales tax. Provision should be made. Okay, good enough. Now, while Suleiman says for sales tax entity shall form a provision for 10 years, Maheen says tax should have been paid on time. It had not been paid earlier. Robert should pay it. Okay. Deferred tax liability should be created. Blackout. Deferred tax liability should never be created for the sales tax. Deferred tax is only created for the income tax, never for the sales tax, right? Abdul says it's correction of prior period errors. Okay, a lot of you people are making a lot of sense. So I'm just gonna go about it. I'm just gonna list down the pointers that how would I actually answer the question in the examination. I would say that provision is a liability of uncertain timing or amount. Next thing is that the next thing is that provision is recognized when a present obligation, either the legal or constructive, as a result of past event, which will require probable outflow of economic benefits. Okay. Now, so which will require probable outflow of economic benefits. Now, with respect to it, you need to understand few things, which is that um, the entity has made an error with respect to the interpretation of sales tax law. The fact that the entity does not expect tax authorities to detect the failure to pay does not exempt it from recognizing a liability if it was due. The sales have happened in past, hence they were the past event. They create a legal obligation. So there is a present obligation. If authorities requires ruble to pay, then the payment will be outflow of economic benefits. Then the payment will be outflow of economic benefits, right? Now, see what actually happens is that if the authorities cannot claim back the tax for more than 7 years, the entity is still had to understand that it was liable. An assessment of the sales tax that may become payable shall be made. A provision shall be recognized, but this is to be treated as a correction of prior period error and shall be adjusted from the opening retained earnings. And the opening liabilities to be adjusted. So I hope that you people do understand that. I hope that you people do understand that what is actually going on, right? Okay, good enough. Now let's just move a bit forward and let's talk about the income tax scenario here. So if I talk about the income tax, what's going to happen with income tax? It says on 31st December 7. You didn't get the last line? Okay. Can you just read it again? Yes. Okay, now what actually happens is that income tax, it says on 31st December 2007, legal proceedings started against 𝗘𝗺 by the tax authorities in the same overseas country for unpaid income tax. Okay. Now what happens is that 𝗘𝗺 disputes the fact that it owes income tax as it has always paid this tax on time. Okay. 𝗘𝗺 company considers that it is just a coincidence that these proceedings have come in and does not relate to the sales tax issue. Okay. 𝗘𝗺 considers there is a little chance the income tax succeeding. In any event, 𝗘𝗺 company considers that it cannot measure any potential tax liability as in its opinion none exists. Okay. So with respect to the income tax liability, although with respect to income tax liability, although the case has been taken up by the tax authorities and according to the 𝗘𝗺 company, they have been paying taxes on time and are not liable to pay anything to the tax authorities. Furthermore, since the outflow is not probable, therefore it does not meet the criteria for the recognition of the provision, right? It does not meet the criteria for the recognition of the provision. 𝗘𝗺 will have to make an assessment of whether the outflow is 𝗘𝗺 will have to make an assessment of whether the outflow is um, of whether the likely liability to be remote or possible, and would have to consider disclosing the contingent liability accordingly. Okay, lovely. Now let's move on to the next part of the question. And the next part of the question is exhibit number 3. The exhibit number 3 is like this. और भी कुछ है? ये रहने दो. और भी कुछ है? हाँ? सही. ये जो ना इसको खोल दो. ये नीचे वाला वापस उसमें रख दो. ये बाहर निकाल लो. सिर्फ प्लास्टिक खोल के यहाँ रख के खोल गिर ना जाए. It's low, like it's if it's remote, you just have to disclose, nothing else. Now let's talk about the third one. Discuss the advantages of the financial statements applying a single historic fixed exchange rate, whether this is applicable practice and so on and so forth. So there are multiple requirements to this question. Let's try to see what's the last one, the advantages. Okay, so what do we need to do with respect to part C? Discuss advantages for users of financial statements of applying a single historic exchange rate. Um, whether this is acceptable practice. Thirdly, whether it would enhance the usefulness of the financial statement. Now, again, I'm gonna give you 5 minutes time to read through it and let me know that what do you think about the answer. मैं इसी में खा लूं. Okay, now let's just see. It says ruble has substantial deposits in currencies other than its functional currency. It also has a number of overseas subsidiaries where local currency is used to prepare financials which are translated into presentation. These countries often suffer fluctuations in exchange rates. So ruble decided to eliminate the effect of exchange rate differences and presented financial information using single historic exchange rate for the translation which is not updated between periods. Now, the advantage is, okay, if the advantage is that with foreign operations, it's easier to evaluate slash compare performance if the impact of exchange rate is eliminated. So that's one thing, right? The second thing is that enhances comparison, right? So these could be the advantages, plus easier to prepare financial statements as not much effort is needed for establishing exchange rates and accounting for exchange differences. The treatment is not acceptable under IFRS. Under the IFRS, the SOCI is accounted for, is translated using average exchange rate. and the SOFP translated using closing exchange rate. The translation reserves also arise. So these are the things that you would have to tell them, right? Now, plus what happens is that for the overseas deposits, they should be translated using closing exchange rate. Okay, now. Whether it would enhance the usefulness of the financial statement if the foreign exchange gains or losses on the rubles overseas deposits are recognized in other overseas deposits, they should be translated using the closing exchange rate, and the exchange gains / losses should be recognized in the income statement as the overseas deposits are monetary items and the gains or losses on the monetary items are recognized in P&L and not in OCI. The financial statements usefulness would be compromised if it is recognized in the OCI instead of P&L, right? As it would not be reflecting the impacts of the movements, right? Do you get it? Do you get it? Yeah, do you people get it? Yeah, the non-monetary item gains or losses goes to OCI or it goes to P&L also, depending upon that how exactly depending upon that what exactly is the type of item, right? It is not like that. It depends upon what type of items is that. See, like for example, if you have got the investment property, and if the investment property is remeasured, so what actually happens is that um, we recognize the gain or loss into the uh, P&L. But if there is a property, plant, equipment under the revaluation model, that actually goes to OCI. If the property, plant, equipment under the cost model, it goes to the impairment loss goes to P&L. So basically what happens is that you need to understand this thing, that it would depend upon that what is the accounting treatment. I mean, it would depend upon what is the accounting treatment. right? Okay, so we are done with this question also. I've shared with you people a link to my SBR community. You all can become part and parcel of that community. So what I'll be doing is that after once we end up this session, we'd also be sharing the recordings link also. And plus, in addition to this, there are some summaries also that I have, which I'm also going to be sharing with you people. So you can get benefit out of that. You may actually join that, so that you are in touch with us. So what I'll do is that I think that's it for today, and I hope that you people would have actually learned a bit about how to handle the scenarios, how to handle the questions, how to answer them, how to actually construct the answers. So I hope that you people would have learned that in today's session, right? So yeah, thank you very much. And I mean, like, just one thing that I would want to tell you is that when we look at the examination question, at times what happens is that we realize, we think that, oh, it's very, very difficult, but usually what happens is that um, Um, Larev, I'm just gonna send something maybe probably tonight, not tomorrow morning, tonight, about the current issue. So now see, what I'm actually suggesting to you people is that just make sure that you don't panic a lot. Just make sure that you don't panic a lot. That's the important thing. If you're gonna panic, that's actually gonna be a problem. Just don't panic, and inshallah everything will be fine. So because once you read the question, automatically you start getting to understand that, oh, okay, I know this can happen. So even if you actually just write down the pointers for yourself and then elaborate on the pointers, that's the best approach that you can have. So thank you very much, guys. Thank you for being here. Wish you all the best for the examination. Stay in touch, and inshallah, you would do amazingly well, inshallah, tomorrow.